Alright, good morning. You guys hear me? And, oh, here we go with the damn blurry screen. Hold on a second, guys. Hold on, guys. I'm trying to figure out why this screen is blurry again. I updated to the newest version, and now it's back to what it was a couple weeks ago. Let me text Bruce here. This thing is such a piece of garbage. Hold on. Alright, hold on 1 second, guys. Just texted Bruce. He should be getting back to me here in a second. Good morning, Sahil. I'm just trying to figure out this software. I updated it and now I can't the screen is all blurry on YouTube again, so I want to get this set up before I start. If anybody's familiar with this software, let me know how you increase the visual settings. Alright, well, I guess I can do the disclaimer while I'm waiting for Bruce to get back to me. Since it's audio and video.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider their financial stability prior to trading. Past performance is not indicative of future performance. The software, strategies, chat rooms, websites, and internet-associated websites are digital venues for educational purposes only and should not be construed as an express or implied promise or guarantee that you will prompt trade losses may be limited in any manner whatsoever. Users of the information accept sole responsibility for the outcomes of their deployment and holds Staples Trader, LLC, and any associated companies, agents, management, owners, and customers harmless without reservation. Please trade responsibly. Commodity Futures Trading Commission, CFTC, Rule 141, hypothetical and simulated trading performance results and certain inherent limitations. Some features are inherent. No representation is being made that any account below is likely to achieve profits or losses similar to those shown. In fact, there are frequently sharp differences between hypothetical or simulated performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally pre-paired with the benefit and downside. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or aptitude to a particular trading program is trading losses are material points which can also adversely affect actual trading results. Because these trades have not actually been executed, the hypothetical results may have or overcompensated for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to the markets in general or to the implementation of any specific trading program which cannot be fully accounted for in simulated trading or in the preparation of hypothetical performance results involved, of which can adversely affect actual trading results.
This
This trading room and this webinars are not intended to vary my trades or to give specific trade recommendations. And also themselves, I share trades and potential trades and myself based on my personal analysis. The goal of this room is to seek trades, identify specific areas of trade, and themselves with ultimately the decision is yours. Trading is extremely risky, and you decide to follow my personal trades, you sort your own risk, and can potentially lose your entire account and even more. And I was profitable and have routine drawdowns on my trading account. The spreadsheet you have access to is my personal spreadsheet that I use to have its own values and ATR values, and I'll be pinpointing exact prices for my trades. You can see when I enter zone prices into the master spreadsheet as well as the prices of the trades, whether you want to go long or short. You have the ability to copy the spreadsheet, enter your own values, and use mine to confirm zone prices and to grade and draw the zone spread for yourself. The spreadsheet is not telling you which direction to trade, it has entry prices and stop prices for long and short positions depending on which way you personally decide to trade. Alright, I'm not hearing anything from Bruce, so it looks a little better now. You guys have to put up with it on YouTube for a little bit. Hopefully he'll get back to me and I'll figure out what the deal is with the software once again. Alright, otherwise you can watch it in the Discord, Bookmap. Go to Bookmap Discord, and it's, you go right here.
S&P stocks LES 531 contracts.
Click on this is the voice channel, and you can get in there. Alright, I'm actually short ES, and there's just some new setups obviously popping in here, so we'll go over what I did here. So there's some sell ice right at the open. You had 1500 plus there, and then another 2000 here. That's all incorporated in this zone. That was that. I took this trade aggressively, so I have two different entries. One is aggressively as soon as it breaks an ATR outside of that zone or just outside of an ATR, I get in certain situations. Other entries are I wait for the full ATR, I wait for a retest of the zone, and then a failure, then I get in. So this one was an aggressive entry because this was an inflection zone, an important area of the bar charting. This is from a while ago, but you can see this struggling in this zone, and these are some of the best. Again, I know this YouTube is very blurry, so just bear with me. Hopefully Bruce will get back to me. This market gapped up from here straight into this zone. These are some of the best IZZY trades, inflection zone trades. When you have directional conviction into important zones, they tend to fail at least the first time. So this was a zone from a long time ago. I don't even know if I still have it on here. Yeah, so you can see back in, when was this? March of 2022. There was a balance breakdown there, huge directional conviction, came back, failed again, selling tail, directional conviction. So this was from a long time ago, first retest of it right now. And so any of these areas, so these are what I'm showing you on these webinars are areas I deem important. So I find my areas that I deem important, and then I wait for the volume event, which is the most important thing that you can use because it's what's happening right now in these areas, and that's the edge. Yes, my areas, things I look at are an edge inherently by themselves, but they're not as strong, obviously. Yeah, you can just short blindly into this, and right now I'd be working out for you without a volume event, but when you get the volume event and my parameters and my rules that fit to trade that's even better. That's showing me that this area is important still. Big traders find this area important right now, and I use this real-time volume to help me get in the trade. So I shorted, you can see on this spreadsheet, I shorted at 45.25. So this is the ideal situation, is when you get in a trade. We talk about trailing your stops all the time, how traders just randomly trail their stops to protect them, using air quotes, their profit, and all they're really doing is throwing away profit, because these algos that are 85% plus of the market, they know that traders trail their stops, and then when nothing's really going on, when it starts to die down, that's when they start to play their games, right? They can read this stuff just like we can, and they know when there's no one, the big money's not playing, then they start their rotation games and whipsaw games and stop everybody out, right? So I trail my stops based on things that happen in the market, right? The market doesn't care that you want to only risk 2 points when you put on a trade. The market cares about volume events and volatility, so that's what I trail my stops to. So now that there's been a new event, I shorted off that first event. Now I can draw this new event, and I can trail my stop based off of this event, and I can trade off of this event too, potentially, depending on some parameters that we look at. We'll go over that. So let's get this zone drawn here. I don't know why Bruce is not getting back to me. He might be on vacation, but he usually gets back to me immediately. Again, if anybody's familiar with the OBS software, if you know how to change the the resolution, let me know. There's usually some brainiacs in here that know that stuff, so. Otherwise, head over to Discord. You can watch me there. It's free. The Bookmap Discord is free. All right. So that's your newest zone, 4626 down to 4624. Enter that in the spreadsheet. So this is a spreadsheet proprietary to my trade room. I'm going to have a subscription version of this for those of you that can't join the trade room. You know, you have normal jobs or whatever. You can't be in there all the time. It should be out. I thought it was going to be out already, but it should be out by early next week. Where you can just literally subscribe to the spreadsheet, and this thing's a godsend. So it's very helpful as far as putting in your zones. It gives you exact prices you're trading. You put in your account size and your risk, and it tells you exactly how much you need to be risking based on what you want to risk money wise, and then the exact areas that you get out based on get in and get out based on my rules of from watching 42 million of these things. I have distinct rules that I trade these. So right now I can trail my stop. So if I were to go short this newest setup, my stop would be at 46.30. My original stop was an ATR above this zone, so you can see I can move this down pretty substantially. So my first stop was an ATR above this zone when I shorted ES. I got in at 25. Stop was I think it was like 4 points above here, so it was right around there. Now with this new event, I can trail my stop on there. It's 46.30. I'm not going to stop out in a prior event, so I'll move it just above that zone, because if you have the option to move your stop just a little bit, it depends. You got to use some reasoning here, or your own judgment. If the zone's huge and you got to risk, an extra 10 points, well, yeah, you just got to bite the bullet and stop out in the middle of the zone. But if it's only a point or two, get it out of that zone, because so many times these markets come back to these prior volume events and then die. You don't want to be stopping out right in the middle of it. So I will put my stop at, say, 31.50. I'll get just outside that zone. And we'll go with some of these other trades that I have on. 31.50. So that is working. All right, so then let's see where we are on the charts and see what I can do here. I have distinct strategies that we take in my trade room and that I take for my trading that I teach. So the first trade was an Izzy trade. That's aggressive. That was that moving in that zone that I showed you. Instant failure. Sorry, with a volume event, I got short that. And now, any of these volume events are BARFs, blind ATR retest failure. And what I'm trying to show my room with that trade is, that's obviously the most active trade, and they're nonstop. But the whole idea of this is to show that this is the inherent edge in the market. Like, it doesn't matter. I don't use for the BARF. I don't care where this occurs, right? So as long as it goes ATR retest failure, I will take that particular strategy trade, right? I have different accounts set up, Apex accounts set up for different strategies, so we can get the winning percentages, so on and so forth. And we'll go over Apex later, but each one of those strategies are a different trade, right? So this would be a BARF if I were to take that. So I do have a filter for the BARF I wanted to try out for the month of July, because I just been going back watching algo guys. So this is we call it algo guy in the room. You can see most of my stuff is named with like memorable, funny names, and that's the whole point, is to keep it light and to remember this stuff, right? So like all my setups are like Dumb and Dumber and Step Brothers and stuff like that. That's to remember them. And same with this. This is algo guy, and it's basically algos. There's so many algos that trade off of this. It's an exponential moving average, right? So the blue is the short-term exponential moving average. The red is the longer term. So when the blue is above, it's in a bullish state. When the blue is below, it's in a bearish state. So when I went back to some of my recent trades, and I'm talking like 90% of my losers were when I was going against algo guy. So there's certain situations. So you may be saying, well, then you said you're short. Well, I am short. Izzy trades are a different animal where they're that powerful. I'm willing to fade algo guy. But the BARF trade, because it's just so active, I want to stay in the direction of algo guy on those BARF trades, and it's been much better results. So BARF and lick, my BARF and lick trade. So the lick trade is basically like a barf trade, but you're trading in the direction of major liquidity. And we talk about the liquidity all the time here, how these markets are. It's a gravitational pull to this liquidity because this is the big money. The big money wants to get filled. So, I am short, but it would not surprise me for this to hold this zone and get up into this liquidity. So, again, I'm short one strategy. I can put on another strategy based on my other parameters for my other strategies. The beauty of my system is I will never have, and it's important for the apex too, because in apex, you're not supposed to have opposing positions on, right? So you can't have multiple. You could have like up to 20 accounts in apex, so you can't be long one, short another one of the same product, because there's games you can play, so on and so forth. So they have rules. But the beauty of my system is if I end up getting long, say I get long a lick trade to play to this liquidity here, well, I will be stopped out of my current short, because the minute this breaks an ATR above this zone, we already have the stop in. Well, I'll be out of that trade, and then I would be in my lick trade. So that's the beauty of the system. You're never going to have opposing. If you're trading, even if you're trading my different strategies, you're never going to have opposing setups on, or opposing positions on, I should say. All right. So first, we get the way I determine whether this is a bullish or bearish setup is if it can move an ATR out of this. The first movement of an ATR out of this zone will determine whether it's bullish or bearish, right? So I'm using a 5-minute Wilder's ATR, and I've just determined, again, from watching so many of these, that if it's able to push a full ATR, that is telling me something, and that I want to trade to that direction, right? So this is all in the spreadsheet as well. You want to stay on top of your ATR. It's 3.40 now. So if this market gets down, you can see the validation price. If it gets down to 2050, then this new setup is a bearish setup, and it looks like that's exactly where it got to. And this is the tendency as well. We have an actual exact trade for this tendency. The market will get to an ATR, and then these algos snap it back to the volume event. And that's what this trade is on my spreadsheet. We have two different trades. This is the position trading side of it, where you can see all my strategies right here, right? And this is going for bigger moves, and that's what this is. And then if you go down further on the spreadsheet, this is the ATR reversion strategy, where you're playing the minute it gets an ATR, you're buying it, and you're just playing back to the zone. So in this case, you would have bought it for the one ATR. You would have bought the 21 at 21. You would have exited 23.75. So that all you're doing is taking advantage of the tendency. And I've been saying for 5 years on these Bookmap webinars that these markets, from my observation, my opinion, retest these zones 70% plus of the time. The question is, how far will it go before it retests? Well, the sweet spot for equities is usually a 1 and a 2 ATR. So a lot of my traders in my room take the 1 ATR, they take the 2 ATR, right? Sometimes it'll go 3, 4, 5, but what I'm saying is 70% plus of the time it will retest these zones. So we're just trying to take advantage of how far it goes before it snaps back. So again, this was the perfect one. You were in at 21, you took 2 ticks of heat, right back to the zone. So there's your ATR, there's your retest. This fails, I could normally put on a barf trade, but again, I'm not fading algo, guys, so I'm not going to short barf. I am short the Izzy trade, but I'm not shorting barf, because you can see this is a bullish scenario right now with the algo guy bullish. So I won't take the barf trade, but I am short the Izzy trade, so we'll just let this ride. And then I look for certain areas where I'll start piecing out of this trade, right? So I pay myself. Let me see if I can find that. I show you guys. I show my trading room. They're so sick of seeing this thing, but this is another very important thing in my room, and something that you should absolutely have in your trading. Sorry, trying to find this here in my room. There's a prerequisite. If you come to my room, you have to tattoo this to your forehead or your thigh. Just kidding. But you should be reading it every day, minimum. I'm trying to find it here. Here we go. All right, so I pay myself as the market makes money available to me. So these are the areas that I pay myself as it moves in my direction. So we talk about this all the time. Everyone's hung on the there's this thing about R. You shouldn't be putting on a trade unless you get you expect 3R, 4R. yeah, I agree with that. You know, when I put on these position trades, I'm expecting a bigger move because that's inherent in what I'm doing, right? In the volume events, the volume events should produce a bigger move, right? But it doesn't mean I don't, like right now. You can see this is bouncing off baby lug. We'll talk about Ludwig levels. This is an area where I mean, I don't have. I mean, I got in at 25, so I'm not going to get out at this area. I'm just hoping if this bounces, it wouldn't surprise me. But I'm not going to get out with a point profit, right? But if this says this heads down to yellow log, well, that's one of the areas that I get out. Prior red, directional yellow. That's a good area, and that's also confluent with daily value area, which is one standard deviation from VWAP. So that's an area where I would piece out. I'm not going to piece out right here, 1 point in my favor. But the point is, yes, I want multiple R on my trade. And I'll always keep a piece on going for the bigger move, and my bigger move is usually trying to move to the major lugs. So again, these are her. She calls this big blue and big red, and these are unbelievably important for support and resistance and actual targets for your trade. So I will get out at areas. So for instance, this gets down to 1850. I'll probably cover half of them. Right, I've got 12 on. And then I'll keep the other half, and I'll try to hold it for the bigger move, the R move. And then when all is said and done, when you add it together, this exit here and this exit here, well, then yeah, that would probably be a couple R. You see what I'm saying? But I don't just put on a trade and don't get out until I get 3R. That's nonsensical to me, right? I'm going to respect important areas because, the markets tend to bounce off these areas, especially, if I'm short in this type of market environment. This is obviously a very bullish market environment. It's been for months, and this is even more bullish overall. It doesn't mean it can't pull back here, and it probably will because they got to screw all the longs first before it continues up. But this isn't a bullish state. This is a breakout of a multi-week balance area, right? So this is not by any means a bearish market longer term, right? So I am a day trader. I'll trade both ways. But my point is, when you're in a bullish state, you want to be taking profit as this thing moves for you, and not try for. I'm not trying for some 100-point move here, right? I'm just trying. If I see an area that's important, I'm getting on to some. So that's what I'm trying to say. You got to recognize your state too, where you can use some judgment as well. Where say this was in a bearish state, and we got down to yellow lug and daily value area. So that would be right here. That I could say, you know what, this is a bearish market. I'm going to see if we can blow through here. See the difference? Like, I'll give it a chance to blow through there if we're in a bearish state. This is a bullish state. I will be covering in a heartbeat down in this area. And it's starting to head down here now. So, not all of them again, but I'll cover half.
Stops and Icebergs sells EO. 151 contracts.
All right, then we'll go over some other trades. I'm watching this closely. I'm going to be getting out of half here. I'm not messing around. I mean, this market, like I just said, is bullish overall. Here we are. I'm just going to get out of 6 here. Hold on, yes. Don't be running up on me. All right, so I'm out of 6 there, and I got 6 on. So now what I do is I'm going to try to let this run where I won't get out. Well, I got 6 on. I would watch, like the next area I would watch is basically like baby lug here and extreme standard deviation, 1.5 extreme standard deviation of VWAP. I'd probably get out of 2 there. I still have 6 on, and then I would hold the remaining 4 and try to get down to blue lug. Or if I get an opposing volume event that turns bullish, well, then I'll get out of all of them. Turning bullish means it fits my rules for getting out of the trade, right? And meaning you get a volume event and then it moves an ATR above there. So we'll cover that as it happens, but again, if you got on late or if you can't see anything on the blurry YouTube because this OBS software sucks, I got short here aggressively off of this volume event. There was about 4,000, close to 4,000 sell ice, and then this came in buy ice, and that failed, right? But I didn't do anything off of this one, but I trailed my stop to this one. So that's that. We're gonna let this thing could roll, and we'll wait for some new setups there. I am currently short bonds. So this is looking like a good trade here. I'm a looking and I'm a liking. So I haven't even got a chance to see this, but this was right around, what time was this? 807 central. You see this buy ice come in, my threshold for, that's the other important thing, right? So this is what I tell you guys every week. You're doing yourself a disservice if you're staring at the shitty E-mini S&P all day long, right? These volume setups are effective across all futures markets, every one of them. Why? Because you're dealing with real-time volume and how loaded up traders react when they're wrong. That's what we're taking advantage of, right? So I don't care what you're looking at. You see, I'm looking at 17 different markets. I don't care, as long as you know the threshold of the market. It's all the same patterns, right? So this was 500 buy ice. This is one of my 5. Speaking of which, I got to put this in the room. This is one of my 5 or 6 distinct setups that I trade off of in my trading course. And I'll put this in right here. I forgot to put this in the YouTube channel. This is my contact info and all the links to everything that I use. Let me find that here. Hold on. All right, so that's in the YouTube channel. I'll put it in Discord too. Hold on here. If I can find it. This Discord channel is just there's so many rooms in here now. It's really, there we go, put that in there. Please let us know on this channel when the spreadsheet is available. I will. It should be, I got a developer working on it. You can see this is my Upwork. I'm using a developer in India. It should be done here shortly. All right, so anyway, this was, I took a barf here because Algo Guy was in the direction, we talked about this a little bit ago. Algo Guy, I'm only taking barfs in the direction of Algo Guy, and you can see Algo Guy is really rolling down in here, but this was bearish. The setup was like right around here. I saw the blue below the red. I waited for the ATR, the retest failure, and I got short bonds. Doesn't matter what you're trading, it's all the same stuff as long as you know a threshold. So I need to be eyeballing where I'm getting out of some of these, by the way, because I got 2 on. Let's see. Go to bonds. All right, so I actually, this saved me being not watching this, because I would have definitely been out, probably all of them at the blue lug, right? So this blew through the blue lug, and many times what I tell my trader, and we'll talk about the lugs here in a second, but these things are great support and resistance. So look at the difference here. So when this thing blew right through the lug, well, why did it blow through the lug? Well, probably because there's big money playing today, right? So you don't get those algos fading at the lugs. And the lugs, whatever her parameters are incredible. But whatever they are, it's universal. Like, these algos know these areas. It's pretty amazing.
Stocks LNG, 233 contracts.
And I just missed a huge trade in that gas too. I was watching that and I forgot to put it on. Anyway, you can see this heavy relative volume. So this is a relative volume chart on Sierra chart. It shows you this exact time period for the last 30 days. So you can see this is right when it blew through that lug. That's where you see this heavy volume. So when you see that, so say I'm playing for the lug, well, if you see that heavy relative volume come in, you can be like, okay, I'm going to see if we can blow through there, and that's exactly what happened. So what am I doing here? Hold on. So that, I don't really see anything else. There's a baby lug down here. This is obviously extreme standard deviation, but it's hugging of VWAP, but it's hugging, and you get huggers. We call them huggers a lot of times, where it'll keep hugging the standard deviation because the big money's playing. And these algos that usually try to snap it back, it's like a self-fulfilling thing where they fade and the big money runs them over, then they got to puke, and that leads to the next wave. And then they fade and the big money runs them over, then they got to puke. So that's why you get huggers when you're seeing heavy relative volume. So pay attention to your relative volume to help you stay in trades. The other thing I'm going to look at here is this an important zone. This is right here. So I'm actually going to get out of one of my bond shorts right here. This is an important inflection zone. And if I got a volume event here, I could take it long. But I'm going to get out of one here. Hold on. And then what I'll do is I'll hold one for the blue lug. So I'm out one there. You can see it's already starting to bounce off there. So I'm out of one short there. And then if we get down this blue lug, I'll get out of another one. Or what's my other reason for getting out? An opposing volume event. So if I get a volume event here, I'll get out of my short, and then I will take a long aggressively because we're in that Izzy zone, right? So that's the beauty of the system. Like, you're never going to have opposing positions on, like we were talking about earlier, if you're doing the apex stuff. All right, let's see what ES is doing. I got out of half at that 1850 area, and there's just nothing going on here. So this is probably, wouldn't surprise to see. This is where traders mess up, right? So say you just shorted this one, right? And you're like, yeah, I got it. All right, I'm trailing my stop, man. I'm going to trail it, make sure I book my 5 points. There's nothing going on. Very, very, very likely it starts to do this nonsense and snap everybody out. That's why I don't trail my stops unless I see a new volume event, and I trail it to the volume event. So yeah, but then I pay myself as I'm correct, but I don't trail my stop to random areas just because I don't want to give back profit. That doesn't make sense. The market doesn't care about your profit. The market cares about volume events and volatility. So stop trailing your stops to random areas. 80% of you are not going to listen to me, and you're just going to keep having this happen to you. And then everyone's trailing their stop. They're like, yeah, I got short on this setup too, and yeah, I'm out here, and then it'll do this, and then it'll drop 30 more points, and you're like, you're beside yourself because you didn't catch the move. So stop doing that. If this comes all the way back up, I already got out of half. If it comes back up, I'm basically going to scratch the other half, lose a couple points on that, and I'm good to go. There's another setup right around the corner. So we'll see how many people that stops out on that whipsaw. I missed this whopper in natural gas. There was a number, but I probably would have lightened up into this, but I was watching this damn thing and I missed it. This was a barf and a liquidity. I think this was a lick. Let's see if there's liquidity down here that got filled. Yeah, I would have played to this liquidity, so I missed 2 different setups here. This was a double whammy, a broken double whammy. So you can see. Let me get this. This is the other thing I'm looking at too, which is the next incredible thing from Bookmap is this market pulse. It's ridiculous. So we'll go over that here when we get a chance to. Anyway, this was the volume event, the Dumb and Dumber. In this case, it wasn't the Dumb and Dumber, but it was, but it broke. They don't break very often. The tendency is they reject. Why? Because you get the dumb money puke, the stop runs, which are almost always retail trader pukes, into the waiting hands of the buy ice, right? The hidden buy orders in the market. That's the big money, the smart money. They're smart because they're bigger. That's why they're smart. They make themselves smart, right? So point is, that's usually, the sell stops means it's not usually initiative selling. It's just guys puking. So that's telling you something in itself. And then when you see the big money come in buying it, you're like, okay, that's going to reject. But I never got long this because it didn't fit my rules to get in, right? But this ended up being a broken double whammy. It was able to push an ATR outside of this. It retested the zone perfectly. And you got to, this is another example. Say you took the barf here and you're like, all right, I'm short. All right, I'm going to move my stop down to here just to make sure. And then you get whipsawed because nothing's going on. It stops you out. And then you miss a 100-point move, 100-plus tick move here because you put your stop in a random area. So I missed this trade. I was eyeballing it and I got sidetracked at this time frame. But anyway, I would have been short. Off of this, my stop is an ATR above this volume event. I never get stopped out, and I have a whopping trade in my hands. Like I said, I probably would have lightened up a little bit into the number, but this is... And then the other thing, I would have taken the barf and the lick because Algo guy was bearish. You can see it just keeps pulling. It kept pulling into the red. He'll keep calling me. Movie. Anybody tell me that movie, you get A+ gold star for the day. This is the tendency, right? So the guy I learned this from, I was mentoring a guy like 4 years ago, and he was making tons of money trading this, but he wanted to be better to use the SI, the same things that I'm using now. But the way he would trade it is he'd wait for a retest into the exponential moving average long term, and once it got back below the blue, he would go short and then put a stop above the red, right? You could still do that, but it's way more effective with volume events. Anyway, this was bearish. I missed this trade, but that's what I look for. There was just so many things firing off today, including gold, and like the metals are getting smoked. So what I told my trade room yesterday, what I always say is the big money after the Fed, they usually come in the following day. So you can see, gold is just being, I'm actually long this trade off of this was an Izzy. It's been torturing me for the last hour. But I took this long Look at this move today, right? Obviously the big money's playing today across the board, right? So straight move right through this inflection zone, right into this one. And what's that one? Well, there's a bunch of stuff that happened here, but then it was also the top of this balance area. So I may stop out of this, but these are the best trades. Like this is the exact trade I took on the ES the other way, right? This market's extremely bullish, but you see the zone work perfectly. I'm also going to have a subscription for these zones too. I'm going to have a website with the spreadsheet and the zones and everything else. Again, if you can't get into the spread into my trade room, you have a regular job or whatever, you can have access to all this stuff. But anyway, this was a gap up right in an important zone, faded. And I did the same thing with gold here. It was a directional conviction, huge directional conviction into the zone. So that's why I got long. I got long first move out of here. So here's your stop run into that zone. It was like 380 something, 372. The minute this moved an ATR outside of this, I got long just outside of an ATR and have been tortured ever since. But I'm not stopping out. They can play these games for 7 hours. I don't care. My stop is an ATR below the zone. So this is how I trade, right? So I avoid the whipsaws when nothing's going on. And you can see that's exactly what's going on here. There is nothing happening, and these algos are just playing games with everyone's money. Look at all these algos in here. When you have a market that looks like a Christmas tree, you know it's algo ridden, and you better be ready for, if you're going to trade it, for a bucking bronco. You gotta if you already know that's going to happen.
Iceberg by NG, 152 contracts.
If you already know that's going to happen, you're not panicking when they start playing games with you, right? Stop giving your money away to algos. Get your stops outside of the volume events. So anyway, it's not that it's fun. I don't enjoy it. It kills me, right? I can't stand sitting here watching this. That's why I usually don't watch it. Just put the trades on and let them work. But you got to do that because you're fighting against algos. All right, we got a new setup here. Oh, and I'll show you another trade that I missed. This was an Izzy trade too, and this was this is crude. Guys, you see, like, it doesn't matter what, I just showed you like 5 markets. It's all the same stuff. It doesn't matter what market I'm showing you. Here's crude. I missed this one as well because I was doing my zones this morning for my trade room. This was a move. This gapped up at the time. Right. This closed here yesterday, gapped right in this Izzy zone. Volume event, I should have been short, but this is why I pay myself as I'm correct. So watch this. So the Izzy trades, again, just like the yes trade, those are aggressive. So here's your stop run. Get this off for a second. There you go. The dumb money puke. Not real buying most of the time, just retail traders pukes. I would have been in aggressively right there. That's a 80 tick trade. Where would I have been out? Well, let's see. Let's see if there's anything important, powerful that I look at that would have got me out of that trade. They all work perfectly again when I'm not in them. Oh, look at that. Is that an exact bounce off the blue lug? Who knew? So I would have been out of all this entire trade right there. So I missed that trade. That was that Izzy trade. I'm out at the lug, right? There was no volume event, but I would have been out right there. And then look at that. Looky, right off there. So again, I think I put this in the spreadsheet. Or in this here. Go here, Ludwig levels. You go to our website. These things are ridiculous, guys. I've been talking about them for 2 years. This is the second most powerful thing I've ever seen next to the SI. But put your name in the comments that you saw on a Bookmap webinar. You get special pricing. You can try it out for 3 days. Trust me, once you do it, you'll never not want to use them. And you should hear people in my trade room talking about how they can't trade without the lugs now. And I'm the same way. It's like you need them. There's just so many ways to trade them too. You trade them for obviously targets. You trade them for support and resistance. You trade them based on the thesis that happens, right? So when it builds new lugs, it should hold the new directional yellow and prior red if it's going to continue to be bullish. If it can't, then you expect blue. There you go. That's exactly what happened. So you can use them for thesis, support and resistance, and targets. They're incredible. And then when you get volume events there, they're even more incredible. We have an exact trade, a slug, a stop run into, just look how many things are here. You had the lug. This didn't happen, but I'm just giving you an example. There was no stop run down here, but you get extreme standard deviation of VWAP. Well, we just talked about how these algos snap it back when nothing's going on. You get blue lug, and then when you get the volume event, that like a stop run that is usually not real selling, those are the best trades. right? So that's this one. Slug. Stop run at major lug. That's been the best trade. All right, so we're just, this is, look what happened in ES. Shocker, shocker. How many people does this just stop out with the algo games, whipsaw, do nothing, nothing's going on, get everyone out of their shorts, and then continue down. Right? I'm not saying that's going to happen, but this is why. Look, this can easily pop straight back up. I don't, it is what it is. I got out of half here. If this pops up, stops me out, but I'm going to demand this thing comes all the way back, gets through this volume event, and then pushes an ATR out of that volume event, which I'm forcing it to get through another volume event for me to be stopped out of this trade. So that's a lot that has to happen for me to be stopped out. I'm willing to sit through this to try to get to my ultimate target, the blue lug, and or an opposing volume event. That's the king. If that comes in, then I'll get out. Other than that, I'm going to sit here and be tortured. All right, let's see if you guys got any questions. I got to take a breath. Sorry about the YouTube. I don't know where Bruce is. He's never not responded. But
no, I'm here now, Scott.
Oh.
I was just texting you.
Oh,
it looks good to me. I'm looking right at it.
Your YouTube looks good. Mine looks completely. This is what mine looks like. Look at this. Can't even read the numbers.
No, I'm looking right at it. Looks good to me.
All right, well, since you're on here, just so I don't have to do this again because I was on vacation, I wasn't really, because I updated the software.
There's nothing you can do on YouTube. I mean, like
No.
The street.
No, the OBS here, right? Where we did this last time.
Yeah.
So settings,
Yeah.
was it output? I changed this. Is this what I need to change, the video bitrate? Or what do I need to change to make that clearer?
Yeah, I put in like 3,000.
Okay, yeah, no, well, 30,000 you mean?
No, like put in 3.
Well, that was just on,
maybe even try 4,000.
but that was just on 15,000.
No, it was on 1,500, wasn't it?
No, it was 15,000. That's why I said 30,000. We can try
no,
that.
I mean,
Is that what we did last time, or was it something else? Because whatever we did last time, it worked. So he also says 6,000 bit rate is good enough.
I'm pretty sure it's.
Because it still looks blurry to me.
Yeah, they say if you want pixel perfection or perfect live streams, change video bitrate to 4,000 kbps. This is the optimal video bitrate for live streaming, full definition 1080p at 30 frames per second.
And what?
So 4,000, you're good. You're good to go.
All right.
Audio bitrate, they say, is you can bump that to 320, but your audio is fine, so I wouldn't mess with it.
Okay, and then if I want to turn this down though, so it's not picking up, because it picks up my internal audio, how do I turn this down so it doesn't? I mean, so it turns, meaning it doesn't pick up. Like if I have tick strike on and my squawk, everything talks over me because it's picking up my actual system audio. How do I turn that down?
I mean, can you just turn your tick strike down? Don't do it here. But
no,
just,
it's on the. It doesn't matter. Like it doesn't matter even if I turn down my volume on my internal.
So is the mixer below it there? Or can you just, there's a slider there.
Is that it? All right. Well, I mean, I'm looking at the YouTube and it's very blurry, so hopefully everyone else sees it. This was on my side too, so if you guys are seeing blurry, again, I'm very literate. Right, well, I went to this, so I was on, for some reason, this was on this. So if you guys are, right, it's on my end, so sorry.
You're just broadcasting at 240p.
All right, so at least I'll learn for next time. I am a little illiterate when it comes to this tech stuff. All right.
No big deal. I mean, this, and then what will happen, Scott, is later after it's in 720 right now or whatever it was, but then later it should be in high def. After YouTube records it and kind of, it'll be in high def later.
Okay. All right. And then I actually turned on the wrong thing. It's not the mic. Then someone said, of course, I turned it down, and someone said they could barely hear me. It's the desktop audio, so I have that down too.
Yeah, that's correct. Yeah.
Okay.
Yeah,
All
try
right.
turning that down. Yeah.
Yeah. All right. I got it. We should be good. Sorry, guys.
Okay.
All right. Thanks for hopping on. What are you on vacation or something?
No, I was busy like all morning long putting out fires left and right, and so it was another one I didn't get to it. So sorry about that.
It's all right. It was my fault anyway, as usual.
Okay, I'll talk with you later.
All right. Thanks.
Okay, bye.
All right. So again, just torture treatment with the ES. There's the pullback to the zone. So I mean, technically, this would be a barf trade, but I'm not fading algo guy. Algo guy is still bullish here. Hold on, because this is the pattern, and I'm going to give you another. And you can see right out. This is what I was showing you. The guy that taught me this, right off the red. He would get long the minute it broke back above blue. I'm not talking about anything Bookmap. I'm talking about how he used to trade this, and then he put a stop below the red. Right? You can definitely trade that strategy, but I would use Bookmap. I use the SI events to do that. Anyway, let's see how many ATR is this one for the ATR trade. So this is all in the spreadsheet. So we were talking about the two trades I have. So the one ATR long, you would have been in at 20. I didn't put this new zone in. Let's put this. Might want to put the new zone in. 26 down to 23.75. I thought I already put this in. Hold on. I did. So 23.75 or 24. Yeah, 24. Okay. Sorry, I was looking at the wrong part of the spreadsheet. So anyway, if you went long, the one ATR was long at 21. This one was 16.75. It looked like it may have stopped out of the one. Let's see. No, that we already talked about this. Sorry.
We ice iceberg by ZW 153 contracts.
This was the one that worked, and it looked like the two worked as well. And we got something in wheat. The two was long at 18. Stop out at 13.75. There you go. The one and the two worked. This is why we have this trade in the trade room. This is like a scalp trade. The one worked, the two worked. All you're doing is getting back out, and you can see the market reacted at this zone, right? So this is a barf trade if you want to take it. I'm not taking it because it's fade and algo guy. I'm already short the Izzy, the inflection zone trade. But this is the pattern. It's just over and over and over and over in every market. I keep saying the same stuff. Stop staring at the crappy ES. All right, let's. I mean, you could stare at the crappy ES, but you're doing yourself disservice, especially in here. You guys ever see this pattern before? Here we go. I'm gonna show you. This is like number 6 market today that I've showed you the exact same pattern, right? So hopefully you guys are getting it. Like, wow, I might want to look at other markets, because you also get guys on here, and I start showing other markets like, well, I don't trade that. I don't want to see that. It doesn't matter what I'm trading. You can learn how I'm trading, and then you can apply it to whatever market you're looking at. It's the same stuff that I keep saying, right? All right, so that's that zone. And here you go. I don't think that was an ATR, though. Let's see. ATR it was like 13, so that didn't quite get an ATR. But you see, the market reacted to it. But this is definitely a bearish event. It didn't quite get the ATR before the retest here, but this is definitely an ATR now. So if we get ATR retest failure, I will go short. This is what I was supposed to do the first time that I cost myself 150 tick winner. I'll go short barf. I won't go short lick now because the lick's too close to my entry, unless there's other liquidity down here now. So I can go short barf on a retest failure. Since I'm going to be covering different markets, I won't be able to watch this, so I'm going to put an alert in. Go to your cloud notes, get this column cloud notes on your chart, left click it, go to notifications, and then you'll know. I'll know when it retests the zone, so I don't miss the retest. We'll keep an eye on that. Let's check out. All right, I'm still short bonds. That's rolling. I got out of one, and I still have one on. We just turned wheat, so you can see here 184. So the threshold for wheat is 150. These grains have been ridiculous lately. Like, I'm not kidding. Soybeans, I'm sure I missed a trade here from earlier. It's still around the same spot, but soybeans has been like, the threshold was 150. We've been seeing 800, 1,000, 900, 800, ice like every day. It's crazy. It's like this is the market to trade in right now. It's like the big money said, screw these equities, they're dead. Let's go over to grains. I mean, it's been crazy. Like, look at this. This was 407 and another 200. This was 600 right here. So this is a good example of, I was watching this and I didn't put anything on because it didn't fit the parameter, but I was waiting for it to get an ATR below there, which it did, I think. Let's see. Validation price was 1850. And it got exactly to 1850 and bounced. Let's see, let me get there. Might have missed it by a tick. But anyway, even if it did get there, that was technically a short setup, but it didn't. So I wait for this. That didn't happen, and it went up here, and it got an ATR above this zone now. So the way I trade these is, if it gets an ATR below, my long opportunity is disqualified. If it gets ATR above, the short opportunity is disqualified. Well, this did both. This zone is done, dead to me. You're dead to me, and I will wait for a new volume event. I don't think these are volume events. But you definitely don't want to. So these used to be, I'm not using 150 anymore. I would use minimum 200, maybe more, because just lately, I mean, and this market has been moving 20, 30 cents at a time. Guys, the money is just as green in here as it is in ES. A 30-cent move in here is the exact same as a 30-point move in ES, right? Pay attention. But if I do get a setup, a bullish setup, you see this liquidity up here, so I will try to trade towards that potentially. Actually, let's go back to wheat. Hunter says no sound. Can you guys hear me or not? Like, I don't know why you would have no sound. That's got to be on your end, I would think. All right, 184. You can still stick with, so wheat's been normal. It hasn't been nutty. So again, to draw these zones, find your price spike. So this is what I showed a guy I was mentoring yesterday. All right, if you really want to learn how to do these, get your crosshair. All right, thank you, AC. And then get your vertical line here, right? And then come to where it started and just draw a vertical line. If it draws, why is it not drawing? Hold on. Oh, I gotta be up here, I guess. There you go. And then do it again where it ended. This is just illustration. I don't do this, obviously. There'd be too many things on my chart. But to draw the zone, now you want to incorporate every price that happened between these two lines, which is this spike, right? So my zone would be from there, this one's a tiny one, to there, right? That's how you do it. So let's draw that. To there, and you can see the on chart too. That yellow line was showing me that was the entity, the buy ice. Let me get rid of this. These things hurts my brain. Color that blue for buy ice. I like to know, what the varying setups are. So that's step one. See if I already missed a trade here. So that was 2875 to 2850 is that zone. So this is obviously already an ATR above here. So let's plug this in the spreadsheet quickly. What did I say it was? 2875 to 2850. All right. Next thing is very important, obviously. We've been talking about it all day, is the ATR. Average range, I'm using a 5-minute 14 period Wilders ATR. It's default on Thinkorswim. You can see it right there in the middle. Whoops. What? It's 3.42, I guess. Hold on. Let me just make sure this is right. $3.42. You see it there in the middle left. So plug that in. And here's, hey, you guys ever see this pattern before? It's number 7 on the day, by the way, that did the same thing. 3.42. All right, so to make this a long setup, it needed to touch the validation price, which is an ATR, 732 quarter. Did not get there. But we'll look at the reverse. If you did the 1 ATR reversion, I don't recommend the 1 ATRs for grains. The sweet sauce seems to be 3, but this one looks like it did it. You would have been in at 31.75. You're out at 29. Did it touch it? It might have missed it by a tick. You didn't get your fill yet. But anyway, I'm watching to see how this. So this is still up in the air what this is, right? Remember, I demand a full ATR. It missed it by a tick. My rules are full ATR, so I could still potentially go short this market, depending. So I got the zone in. I drew the zone. I got the stuff in the spreadsheet. Now I look at algo guys, see which way this is pointing. This is obviously bullish, so I can only take bullish trades on the BARF and the lick. See if there's any liquidity up here. There is. See this liquidity? So I will take. So you could say I got within 1 tick. There's enough going. Let's look at the bigger picture here. You know, if the bigger picture is bullish, it gets within 1 tick of the ATR and then retest. You could say that's good enough. Yeah, I'm not. This doesn't look bullish. This is actually a potential Izzy. It moved, opened up here. It's into the zone. So I could take the Izzy short because it never got a full ATR above here. So these are different strategies, right? The long, technically, I still need to see the full ATR. I didn't get the full ATR. ATR retest failure. I can go long, BARF, and lick. I showed you that liquidity up there. But this is a move into the Izzy zone. If this fails, I could short aggressively. So I will put that on because this did not invalidate. It did not get the full ATR out of here. So I'll take this short. That short is, go to your position trading side. 724.50, 1.21 contracts. You can trade the micro in this as well. The micro is very thin though, and you're going to have a lot of slippage. So I'll put on two wheat. Hold on 1 second, let me find it. So that's the Izzy for the wheat. Put on 2. Enter it. I'm shorting at 724.50. All right, that is working. That it could be disqualified if this came within a tick, so it didn't. If you don't like it, you're like that's close enough, then don't take the trade. Remember we said 31.75 was the validation for a long. It didn't get up there, so now if this gets below here, I'll short it. So we'll keep an eye on that. That might be confusing for some of you if this first webinar you watched, but if you got questions, throw them in the YouTube. All right, so this is a perfect example on why you don't trail your damn stops in the middle of nowhere. How many traders, I'm using air quotes because you're not a very good trader if you trail your stop based on what you want to happen versus what's happening in the market. You're short. You're like, yeah, I got this, man. I'm going to move this down. You're stopped out. And then you watch this and now you're beside yourself. This is exactly why my stop's up here. An ATR above this zone. I don't let these algos F with me. I said it, F. Didn't say the actual word, but you see what I'm talking about, right? Stop getting algoed. See this Christmas tree? Those are algos taking your money. I mean, do you open up your window and throw your wallet out the window? So why would you do stupid stuff in the market, right? It's like, don't get algoed. Don't give away your money. Speaking of which, really nothing happening right now. I talk about this all the time. If you guys are learning or trading or don't want to risk your own money or whatever, I talk about it every webinar. Here's your Apex. This is trader funding. Use this code for any discounts they have. This is an incredible thing. This is what I'm using for all these trading strategies. I have different Apex accounts for each strategy so I can keep track of them. And these will all be live eventually because there's an edge in all of these trading strategies, right? And then I have live trades. I used to trade my own accounts for these things, but it's like I wasn't trading independent strategies. I'm not going to have 10 different accounts. That's number one. Two, it's just too hard to keep. I make so many mistakes. I can't tell you how many mistakes I made just even blowing out these Apex accounts, like forgetting orders in the order book, like doing these webinars. So I'm like, you know what? I'm going to do these Apex accounts because I have full faith in them because I've been using them for a year. So when this first came out, story is short, I tell it all the time. A guy that has been a trader for a long time told me about the Apex, and I said, okay, these things are a dime a dozen. This one legit because most of these they're just trying to take your cash, right? They just want you to. pony up the money for these different accounts. You put your money in, and then they take your cash, right? So, because they know 95% of traders fail. So it's a great business model, don't get me wrong, but the ones that I've encountered have no intention, they don't care about funding traders, they care about taking your money. This is the first one that I've dealt with, and this is why I put my name behind it, that actually want to fund traders, and they have paid out since 2022, and that's when I started using them in March of 2022, $28 million. What's great about them, you watch my YouTube video. Let me just see if I can pull this up. No, that's not it. Hold on. I'll post it in the room. I think it's pinned to my my Twitter. Watch. I have a webinar with them, and they go over, all the rules and everything. But like it's the first, they changed it a little bit. Now it's only 7 days. You just got to trade 7 days, and you need to get your profit goal before your loss limit, right? So you do the one. All mine are in the 150 right now. Then you put your code in. It's 80% off right now. So it's like $60 to do this. You get to work on your trading, and if you blow it out, you lose $60. Well, it's better than losing $5,000, right? If you do well and you make your $9,000 profit goal before you lose $5,000, well, now you're funded and you get this is the one thing I don't like about it. It's not 150,000, it's 5,000. Because if you lose $5,000, you're done, even when it's live. So that's when I see 150,000 account, I'm thinking I get $150,000 to trade with. No, it's 5,000. So that's the one thing I don't like about all these, that they all do the same thing. It's not 150. The point is, it's still a $5,000 account, and with Apex you can get 20 of them. Right, so you can have literally a $100,000 account if you qualify for 20, and you can do the mirror trading. I think it's Ninja Trader, Trade Copier, where you put the position on and it copies them on all 20 accounts. So the point is, if you do well,
Iceberg sell CL 168
I
contracts.
gotta set up in crude. If you do well, then you're funded, and then you don't have to risk your own money anyway. And if you're just working on your trade, you lose $60 or whatever it is, 68, 80% of 297, you lose $68 instead of $5,000, right? These are no-brainers. I put my name behind them. They're completely legit, and that's all I can tell you about that. But like I said, I wouldn't be telling you guys about it. Oh, so what I was saying is I did it when it first came out. Once my buddy told me that it was legit, I'm like, well, I'm going to qualify. I should be able to qualify considering I'm a professional trader. And before I let my room know, and I did it, and they did exactly what they said they were going to do. I got the account right away. They funded me, and I've been paid twice by them, so it works. They're legit. So that's all I got to say about that. Forrest Gump for you. All right, let's see what's going on here. I think someone texted me in my Discord room. Hold on. All right, Snow Leopard, I'll answer your question after the webinar. I can't address that right this second. All right, so this was actually a volume event in that prior volume event that I missed that went right to the blue lug. That was an 80 tick pointer that I missed. Can't tell you how many winners I've missed this week. Probably 10, like whoppers. All right, I'm just going to get rid of that because there's a new volume event right here. You can see, here's your 177 sell ice. Threshold for crude is, how long have I been on here? What time did I start? Oh, it's only been an hour. Okay. I thought I was on for 2 hours. So that's that zone. Incorporate the prices that happen in the spike. Sell ice, and this is an Izzy zone because I know it's an Izzy zone because I missed the first trade in the Izzy zone. So let's go back here and take a look at it. Look at the bigger picture. That's step one, 80.07 down 79.99. Go to your spreadsheet. I forgot to turn my tick strike on today. I don't have any of my market pulse on either. That's why it's so quiet. It's actually kind of enjoyable. Actually, it just popped up to 20. So your ATR is 20. All right, so that's step one. Step two is let's look at where we're at. This actually is not an Izzy. It's above the zone, so I can't take an Izzy here. This thesis-wise, this is looking very bullish. Why? This is a balance area, multi-day breakout. What does that mean? It means, remember, I'm a day trader. I trade both ways. But if I get setups in the direction of my thesis, I trade bigger. So if this volume event turns out to be bullish, I'm going to trade double size. So right now, I'm risking $500. So here's another thing too. So you see how I put these Apex account amounts in here? I'm risking 10% because I'm being aggressive with these things to get these funded, right? So if you're trading a real money account, do not be risking 10% of your account on a trade, on a single trade. The most you should be risking is 2.5%, right? And then if you have an A plus setup, like what I'm talking about, a setup in the direction of your thesis, then you can trade double size. So 5%, but just know, or 4%, you should not be risking more than 6% of your account size in a day ever. So yeah, if you want to put it all on in one trade, and you say, if I love this trade that much, I think we're going to rip, fine. If you lose, you got to be done for the day. Do not say, I'm going to give myself another 6%, because you're going to have a day you blow out your account. I'm not going to go on that rant, but you guys all know my stories. You don't have to learn the hard way and lose $1.5 million like I did doing it, not respecting my loss limits. Follow your loss limits, and if it's just not working out that day, tomorrow's a new day. You're going to be thinking differently, I promise you. Because when you start losing your threshold, or your
stock by CL, 225 contracts.
There we go. When you start losing your, you lose your, you hit your limit for the day. It's called going on tilt, and then all of a sudden you start to lose your mind, right? So this is a good example of a variation of this trade where I could trade this prior event and trail my stop to the new event. So we're already looking at this event. This looks like it's now a bullish event. This is a broken ice. This is one of my 6 distinct setups in my trading course. You can get my course on my website or in the Bookmap Marketplace. So to make this a long setup, we need to see 27. Did it trade 27 yet? Not yet. So this is not a long setup yet. So what I'm going to do now is I'm going to draw this new event. You heard the stops, 225 buy stops. Let's draw that. So I'm going to draw it there because obviously that didn't start there, because if it started there, it would have already triggered the first stop runs trigger when the price triggers, right? So, or when the price is hit. So if this is where, I know the red line is showing here, but it would have already triggered unless someone just threw them in randomly, and that's very unlikely, right? So I don't, that's not the price that stop run started. It's got to be that price. So that's why I have that zone where I have it. Again, I show all this every day in my trade room guys, twice a day. Most days lately, we've only doing one webinar because I was on vacation and it's been completely dead. But I go over this stuff every day, basics. You can be a brand new trader. It doesn't matter. You get in there. All I ask is you get in there, you ask questions, and participate.
S&P Iceberg by ES, 749 contracts.
All right, so we'll come back to this in a second. This still has not proven. I definitely want to be long this market, so I'm hoping these turn out to be bullish setups. I'll come back to that. I definitely want to be on here. By the way, how are all those traders that trailed their stops because they caught 3 points and then they're out? How are they feeling right now, 10 points later? This is what I'm talking about. Stop trailing your stops to random areas. All right, this is a perfect scenario, right? So now, remember what I said? My goal, my target was I got out of half at, I can't remember where it was now, but I got out of half of these. I was short 12. Remember, I got out of half at yellow lug, which was... Yeah, yellow lug, which was confluent with daily value area, and you can see at the time it did bounce off of this. This is why I get out. See this daily value area? That's 1 standard deviation from VWAP. And yellow lug, I got out of half. This could have just done that. I would have been out of half, right? It did this. I still have half on. What did I say my goal was? I did say I might get out of Summit Baby Lug. We'll see if we can push through here because the relative volume is decent. So if relative volume was pathetic, I'd probably get out of half of a half. I still have 6 on, I would get out of 3 here. But you can see this relative volume is not bad. So I'm going to see if we can push through this. See how it's almost 200%, 2 times normal. I'll probably get burned doing it because like I was telling you guys earlier, this market is extremely bullish. You want to be getting out of trades. So this is where you can use Market Pulse too. We haven't even got into Market Pulse yet. This is the next great thing of Bookmap. I don't really need to do that though because now I have a new event. You see what I'm saying? So if there was nothing going on here, I would really be watching Market Pulse. Here's a good example. Like this is what triggered this bias. You see this Market Pulse fire off? We'll go over this in a second. This is one of the biggest selling events in the last hour, right? And it triggered this buy ice. So there's ways we trade this in my trade room. We already have strategies for this. I haven't documented them or anything yet, but because I've only been watching it for a month or two. But say this isn't here. Say there's no ice here. Well, you can get out of trades. You see the sellers being aggressive, and you can see it in the bubble here too. But this is the most aggressive selling in the last hour. Well, if it can't hold this, the tendency is to move away and it comes back. You can get out. I'm not going to go over the tendencies right now. That's part of my trade room. In my trade room, I have videos for this. I've done it on 4 or 5 markets so far. Point is, if you see the sellers being aggressive here, I'm not even counting buy ice, and it doesn't move lower, well, why the hell do you want to stay in your trade? Or not? I mean, I wouldn't get out of all of it, but I'd piece out of some, especially in an important area. So this should hold because the sellers are being aggressive. If it doesn't, I can get out. That's without the volume event. The volume event is king. So I'm going to draw this zone, and now I'm going to trail my stop to this newest volume event. And you can see the on chart. I use the yellow line for the on chart ice. That's this. All right. Get your bubbles off there. This is a really tiny area too. Very compact area. It's basically a 1 tick zone. So this is your, remember I showed you how to draw you can use your crosshair, incorporate the prices that happen in the spike. Just went over how you can use your horizontal line or your vertical line to do that. So here's your buy ice zone. So now what do? Now I go plug this zone in my spreadsheet, and then I can trail my stop. So look where my stop was. I've already trailed it once. Now I'm going to trail it again. So my stop for this, my short, was at, where are we at? 30, right? So now when I put this new zone in, 1150 to 11 quarter. You don't really usually see a 1 tick zone in ES, but that's what it is, 3.92. So now watch my stop change. It was at 30. Now, based on the new event, my stop goes to 16. So I just saved myself. Now I trail my stop. Do you see the difference? I waited for something in the market, not because I wanted it to lock in profit, right? And I saved myself an extra. If I just would have panicked when this thing started ripping up and got out of it and said, oh, okay, 3 points is enough, I would have cost myself, a good 6-7 points based on where my stop is now, based on something that happened in the market, right? So 16 is now my new stop. I'll put that in. All right, so that's working. Now what could I do? I could potentially, let's see what's going on here. Let's see if this is, then the next step is to check out bigger picture. This is the Izzy zone. This is a very, very good percentage long area, right? One is an inflection zone. There's your tails, tail, 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 directional conviction, tail yesterday. It's also the top of this week and a half balance area. This is what I said at the beginning of the webinar. This is the tendency, right? You get all the longs that are like, oh, this is bullish, it's breaking out, I'm gonna go long. Oh no. And then it pulls back, screws all the weak-handed longs, and then it rips, right? So the point is, this is a very good area to potentially go long. Do you see, I'm not just jumping in along in this zone. I need to see the volume event, which I got, but I need to see the volume event as a bullish volume event. So I will take an Izzy trade. So the same area, the same price that I would potentially stop out of my short, I will turn around and flip it long at the same price. You can look right here, 46.16. I could put on 11. This is the Izzy trade, and that's the aggressive trade where I'm not waiting for retest failure. So as long as this doesn't get an ATR below this zone, to disqualify my long, which would be, it's all on here, 07 quarter. So as long as this market doesn't touch 07 quarter, I'm taking that long at 16. I'm going to stop out of my short at 16, and I'm going to flip and go long. If that's not clear, put it in the chat. I'm going to put on 11 there. Hold on. All right, so that's working. A very high percentage trade. And technically, And so you got this going too. All this is the algo guy is still bullish. It's just pulling into the red. It hasn't pulled across yet. The blue hasn't pulled across. So very, these algos play this exact thing where it gets to the red, the longer term, and it snaps out of it. So you got that going for you. I know this is a bullish market. I know it's breaking out of balance. All it's do is pulling back. So this is an example of my thesis is bullish overall, bigger picture. I can trade this setup bigger size. So I'm going to put on double size here. So I'm going to put on 22 instead of, oh wait, what did I say it was? Yeah, it was 11, right? Yeah, 11. So I'm going to put on 22 long MES versus 11, just because I think this is an incredible area. Does it mean it's going to hold? No, it means the probability of it holding is great, especially if this turns into the real-time volume event confirms it, right? I take my shot. If it loses, well, then these are if-then scenarios. Then I'm ready to pivot and be like, okay, something's up here. But it's still not. The only time I'm going to say this market is in trouble now is if it gets through the high volume node of this. Then that would be an official failed breakout. But it's got to get all the way through here. So it can stop in any of these zones and then go higher, right? This is the first stop potentially. I think it'll hold here, right? And then there's other things you can look at, like look at your internals. See what this is doing on the day to kind of determine. I'm getting in this trade regardless, but I'm just giving you guys examples of what you look at. ADD is at 15, like that's nothing. Like if I saw a trend down day like minus 2,000, all this is the advanced decline line, just showing you the entire stock universe, how many are advancing versus how many are declining. Well, it's neutral, it's nothing. When you see minus 2,000, well, that's where you can kind of hesitate, be like, I don't know if I want to take. I would still take the trade, but I wouldn't be taking a double size. You see what I'm saying? The other thing too is you can see the tick has not really been that negative today, right? So if you're just going to see some big, huge trend down day, you're going to see this tick making, and then that's showing, the tick is showing you the overall stock universe again, how many stocks are upticking versus downticking. Most people know all this. But if you're not seeing minus, like the extremes, meaning minus 1,000 or more, there's not the big money, the program selling is not involved. So this is telling you this has a very good chance of bouncing in this zone as well. So I'm okay putting on double size. I was going to, no matter what this told me, I was still taking the trade into the zone. What I'm trying to tell you is if you're trying to make an A plus trade for a thesis, a lot of stuff right here is pointing for this to be a long setup or to rip higher off of that zone. So that's why I'm trading double size, right? So you come up with your thesis. I'm trading these both ways, but if my trade lines up with my thesis, it's an A plus event, I trade bigger. And this is an A plus event. If this trades 16, I'm out of my short and I'm flipping long. All right, let's see what happened in crew. I don't want to miss crew because this is a long thesis as well. Let's see what's happening here. I think that got to this is a good example of a variation too. Did that get to, make sure you keep up with your ATR until you get filled. This is 19.3 now. Did that get up to 26? Got close. Of course, it's got to be within a tick every time, so I got to consider it. Got up to 24. So this is not an official long setup yet. I got to see 26. And guys, you know, you want to, as much as you can, stick to your rules, right? Like, it's very easy to say, well, this is breaking out. You could do it, right? You're like, that's close enough. Here's my retest. But if you're an algo, algos don't say, like when you program an algo, they don't say, well, that's close enough. No, they say it's got to hit 26, retest, and then they go along. So if you want to trade like an algo and trade with what you're competing against, I highly recommend you just follow the exact rules. There are situations, I mean, this is not a bad where hey, it's close enough. I wouldn't do it very often, but this is breaking out of this balance as well. This looks like this market's going to rip off the page, right? So you could say that's close enough. I'm going to follow my rules. I don't want to do as I say, not as I do for you guys, right? So if it didn't hit 26, this is not a bullish setup yet. And I'm talking about this first one. The second one, no idea yet. It's still bouncing around. So we'll see what happens here. So what I was going to tell you guys is there's a way for me to get long off of this setup, if it got there, and then trail my stop to this setup, which would help me tick-wise significantly because my stop would have been way down here. I'll show you. So my stop off of that first event is at, if I go long, it's at 77. which is what? An ATR below this black zone, right? Well, now with the new event, I can trail my stop in ATR, which is about 20 points or 20 ticks. So now instead of 77, it would be 96. See what I'm saying? So it's a way you can trade off the first zone, trail your stop off the second zone, and now I'm saving myself 20 ticks of risk. See that? So guys, if you're not following, if you're new to this, every day, that's all I do every day in my trade room. All right, so this is just bouncing around. Let's see what else is going on here. Gold is just algoing the entire morning. I've been long this thing all morning. I did fill in that wheat trade. Remember, I shorted the Izzy zone, so I'm short wheat. Let's see what's going on here. That's delightful. All right, so let's see what the price is. Where I didn't put my stop on this yet. So I'm still short bonds too. So I shorted at 24.50. It's only like 2 cents in my favor, but my stop's at 32.75, so I got to get that stop in. Hold on here. Let me put that in. 32.75. All right, that's working. Now let's look at some areas where I may get out of one. I got a whopping 2 on, and it is what it is. That's what I can put on to risk what I need to risk. What I'm able to risk, I should say. All right, so let's see what's going on here. This is today's trade. So this is an area where I would definitely get out of one. These are areas I deem important. The bottom of market profile composite. You can see it tried to break out of here today, launch back in. If it gets back down here, I get out of one of them. And that would be extreme standard deviation, just to 1.5 standard deviation of VWAP, so that's confluent. And then you got yellow lug here too. So anywhere in this area is a good place for me to get out of one. And these are all predetermined. I just don't on the fly decide, right? These are all in the trading in the zone document. This is part of my trade room as well. Number 5, I pay myself as the market makes money available to me. So this would be market profile composite low. I get out, and it's confluent with VWAP, extreme standard deviation, and it's also close to the yellow lug. So I'm okay with getting out of one there if it gets down there. So that is working. So remember, this was an Izzy trade, so I got in aggressively. The minute this broke, it broke below. Hold on, this didn't get an ATR above, did it? I may not even. Yeah, this is what I shorted, right? Let me make sure this didn't invalidate. I may not even supposed to have this on. Hold on. Did that invalidate to the upside or invalidate the short? 32.25. No, I never got up to 32.25. So this long or this short is fine. So that is working. And then the other trade, I'm still short one bond, and it's just doing its algo nonsense. I already got out of one. So I'm holding the next one, the last one, to blue lug or an opposing volume event. You see the consistency though, guys? It's not, I'm not like, oh, should I do this? Oh, should I do that? Oh, this is telling me this. Oh, this is telling me that. I'm in the trade. Do you see me panicking out of the one that I still have on because it's just doing the algo nonsense? This is what I expect. If you expect it, you're not panicking out. There's nothing going on right now. This hit extreme standard deviation, and it's popping up here. It's probably going to bounce off the yellow lug and head lower again. But I'm not, unless I see blue lug. We already talked about this. I'm already out of one, so I'm fine with the other one now. Or an opposing volume event. I'm holding on to this trade. I don't think there was a volume event. No. Threshold's 500. Actually, this is the volume event here. So this is the one you got to keep an eye on your markets, because if they go back to back, I'm not going to get the alert. I have it set at 500, but you can see this is 300. This is 171. So this is 500. So I'm going to draw this and trail my stop to this. So I just wasn't on this page. This is the one, if I have it at 500, it's not going to give me the alert because none of these individually have 500. But if they're back to back to back, and this is one house, you can see it with the yellow line, you can make this one zone. Right? Some guys, most of my stuff is black and white, but some you have to use some subjectiveness and some reasoning skills. Use your reasoning skills, right? Like back to back to back. Okay, that's over 500. I'm going to draw that, and that's going to help me trail my risk. So now the new zone's 28 to 26. So now watch how the stop changes. I already got out of one. Now, because this is a new event, say it was? 124.28. 124. So my stop originally was at 125.26. Now 125.02. So I just saved myself 24 ticks, which is a ton. It's $31 a tick in risk. So now I'm gonna, what is that? That's an, if this market is able to get an ATR above this zone, I'm out, right? That, I'm glad I looked at that, because it's probably been like 2 hours and the thing's gonna come all the way back and I should have been out. That's my MO. All right, so put that on. 125.02 is where I'll stop out of that. And I'm okay with that too. The other thing you want to look, if you're using the lugs, don't stop out right on a lug, right? Kind of like you don't want to stop on a prior event. So if it was 125 even, I would have been moving it up anyway. You don't want to stop out right at the lug, especially when it's confluent daily value. Move it a little bit higher. So I'm right there. I'm fine with that. So you pay attention. You can actually even get it above. I'll put it one more tick above there. I'll go 125.03 to get it above the prior blue. This is how you use this stuff to, you know, stay out of bad fills. All right, let me see if there's any questions. I gotta get off of this webinar soon and start the other guy. Let's see, you got questions, throw them in. I got a couple minutes, I can answer as many as possible. If I can find the screen. No questions? I'm that good of an instructor. All right. You got about 2 minutes to throw in a question if you got any questions. So I'm waiting here. I'm going to get out of my short and ES and go long that we talked about. The other thing, actually, I might be able to put a BARF trade on here too. BARF long. I'm already putting on an ISI long. Let's see, what was the validation price? 1550. So if it touched 1550, hey, look at that exactly. So now I could put on BARF. I'm already going to put on the ISI trade. That's aggressive. The first move out of here, I'm long. The BARF, it has to touch 1550, which is an ATR. It did. A retest failure, I'll go long. The BARF at 16 as well. Let's see if there's any liquidity up here. I think there is. Not really. So I'll just put the bar. I'll put the ISI and the BARF on. Let's just check one more thing. See if there is a profile trade here. Call it profiles encourage. Because that was the John F. Kennedy book. See how witty I am, make things funny. Nothing here. There's no profile down here. And actually, I'm going to merge these 2 days. So this was yesterday's trade. This is how I come up with my market profile composites. If 50% of the value area of one day overlaps the prior day, then you merge them. This is pretty close. I'm going to merge these two. I could probably merge it into the prior one too. Oh, I just filled on something. I just filled on my ISI long. So you see how this market profile composite merges with this one. So I'm going to make this one big one. And this is multi-day. So this is a really important composite, especially when it comes back down here, if it ever does. I'm going to change my zone now. So that 46 level is very important. It's an important spot gamma level as well. You guys follow spot gamma, which I highly advise for their levels and his commentary every morning. All right, so if this thing were to, and you can see it's right here, so I'd definitely be on, I was going to be out of my trade anyway, blue lug. I just stopped out, doesn't matter my short, but if it would have got down here, I definitely would have got out at blue lug and then that, because this is like a multi-week composite. So I'm now, I got out of my short and I'm now long. Long ISI. I haven't got the BARF trade on yet. I need to see an ATR retest failure to put on BARF. So I fully expect this to come back. I'm not going to flip out. I'm not going to trail my stop on my ISI short. If it does that, I'm going to go long BARF as well. And my stop right now is 0675. Remember, I traded this double size too because of the bullish, because I'm so bullish, or I have a bullish thesis. And it pains me, don't get me wrong, I want it to go to zero. It pains me to be along these markets, but if you can't beat them, join them, because all it does is go up every single day. I don't care what news comes out. We could be being attacked by aliens and the thing would go up. So, all right, guys, that's about it. This actually looks like it's a bearish setup in crude. I'm not loving the. I can't put anything on here anyway, barf wise, because algo guy is bullish, so nothing doing in there. But I can't go long that setup. You just wait for another one. Gold's still torturing me. I've been long all morning. I was waiting for a retest of natural gas. That still hasn't gotten up there. It got close. That zone. If a retest fails, I'll go short there. I'm still short bonds. We just went over that. And I'm short wheat. We went over that. And I'm long ES. So very active day to day. Finally, this is why I took a vacation. And usually these trade markets terrible July, early August. But today's actually pretty good. But it'll probably be pretty crappy until mid-August. All right, that's it for me. Trade room every day. Head over there. I do this every day. It's all in this. It's all in here that I posted, and everything that I use, and the discounts for everything I use are all in here. All right, I will see you guys next Thursday. Thank you.